Hello everyone and welcome back to a brand new video on the channel. I know it has been a while. In this video, I'm going to do a quick portfolio update to sort of share what I'm doing in the market. I'm also going to be explaining what I'm doing during this crash during the war. So with that being said, let's jump straight into it. So we can see here that I currently have around £20,000 in my ISA. I got around 15,700 left to use of this month's allowance, which I'm going to try and plummet as much in as possible because markets are at a pretty decent opportunity right now. But let's first of all go over a portfolio update. So you can see here that I have these three pies here are the important ones. These you can kind of ignore. Okay, this was just kind of a bit of fun money, a bit of testing. So actually, let's get this out of the way first. Let's just take a look at these test fun money ones. So I did put some money in this quantum computing pie here. I literally put like £100 in just to test it, right? Everything's down, whatever. Not too concerned about that. It was just, again, fun money. Same with this AI stocks here. Again, I put like £150 in here. Not concerned. This metals pie as well, around a similar thing, £200 into this one. And you can see it is down, but again, not really concerned. Test fun money here. The main ones that we're looking at are these three. So if we first of all take a look at the long-term growth, which is sort of the main pie, we are down around 2% today. And the holdings in here are the FTSE All World, the S&P 500 and physical gold. You can see all three of them are up. The FTSE All World's up about 4.5%. The S&P is up 10.45%. And the iShares physical gold is up 13%. Now, overall, we are up on this around 10.5%. Of course, we were up a lot more, around 20%, 21%. So, yeah, we have taken a bit of a bit of a dip here. So, yeah, the sort of overall return is slightly less. So, yeah, that is that. Okay, the dividend ETF portfolio. I do have this ETF portfolio, which are dividends, but they are, yeah, like it says on the tin, right? They're dividend ETFs. So we have the FTSE All World High Dividend Yield here, which currently generates around a 3.24% yield. We have Morningstar Developed Market Dividend Leaders, which pays, I think, around 3 or 4% as well. We have the City of London Investment Trust, which pays a 4% yield. We have iShares UK Dividend, which I think around 4.6%, and we have JEQP, which is JP Morgan Nasdaq Equity Premium Income Fund here, which actually is the one that's gone down or has held its value the most, believe it or not. So that is a dividend ETF pie. And then we also have a dividend individual pie, which, as it says on the tin, is a bunch of different dividend individual stocks. So we have Realty Income in there. We have Legal & General, Main Street Capital, Aviva, BP, British American Tobacco, Standard Life, and Taylor Wimpey. So we can see here that a lot of these, the dividend yield is pretty decent on the majority of these stocks. This is a pretty high yielding pie. So my thinking for the ISA portfolio here is that the bulk of the investments are in going into this long-term growth pie, which again is the All World, the S&P, and gold. I know there is overlap in the All World and the S&P. Completely appreciate that. I understand that. This is how I want to sort of split it out for now, though. So that is that pie, which is where the bulk of my investments go. And then we have obviously our ETFs for dividends, and then we have our dividend individual stocks. So I do want to have a dividend pie as well in here, or a dividend side to my portfolio, so that we can sort of start to generate some cash flow for the long term, obviously building these up. So if we take a look at the overall market, obviously today we're down around 2%. I did top up an extra 2,500 last night. Over the past week, we're down. The past month, we're down almost 4%. 3 months, we are down 2%. Year to date, we are down 2.5%. But 1 year, we are up. And obviously, max return, we are up around 28%. Now, that does include when I had around 65K in here. Yeah, 64 grand. So that is my ISA. This is my plan going forward, is to put as much as possible into here, into both the long-term growth, the dividend ETF, and the dividend individual pies. Now, obviously, the weighting is completely off. We have like 16K in the long-term growth portfolio and, £1,600 split between ETF pies. So obviously we need to do some weighting here. So what am I doing during this dip? Well, if we go to the long-term growth and we just look at the All World, for example, everyone likes to sort of look at the All World. Now, obviously, we were at all-time highs. Okay, we have been at all-time highs in the stock market for a while. So were we due a crash or a pullback? Some say yes, some say no, and it depends on which side of the fence you sit on. But we may have potentially been due a little bit of a pullback for a while. So yeah, I mean, if we take a look to sort of 2020 when everything started to take a hit, you can see here that the all world went from sort of 65, 68 pounds. It crashed almost not 50%, but what's that, like 20, 30% there in the space of a month. So if we have something like this where we have a major crash, this is going to be extremely powerful for people to get money into the stock market, because a lot of people are fearful of investing when prices are down, but they're happy to buy when we're at an all-time high. It's human psychology, right? Buy the top, sell the low. We're fearful when the markets are down, and we are sort of excited and happy when the markets are up. But if you have no money in when the markets are up, and you get in when the markets are up, then obviously you're going to, potentially lose out. So that is really the sort of thesis of my investment strategy here going forward. Is I am waiting to see what happens. I added some money into this portfolio yesterday. You can see here that I have been buying some. If we go to the seal here where you can see I've been buying, I've been buying. All right, this month I've been buying here. We've added around £400 into this over the past month. Obviously, we are crashing more today, so I'm just gonna keep an eye on this, and I may even put some money in right now. Actually, not right now, but you know what I mean. Like just sort of buying the opportunities when the market dips. That is when we want to put our funds in, so that when it does recover, obviously you generate those gains. Now, of course, for an ISA, for stocks and shares ISAs, for me personally, this is sort of long-term retirement planning or long-term freedom, if you like. I'm currently 24. I have no plans to retire when I am 60s, 70s. I want to retire much earlier than that. So for me, it's just a case of plummeting as much money in here as possible. And the reason that I do have a dividend side to this portfolio as well is because I want to generate a cash flowing an income, right, from the stock market for when I do get to that time where we are able to retire. Now, of course, I have £1,600 in my dividend section. It is a drop in the ocean, right? But it's a start. And, I'm going to continue putting money in here. I have a business outside of the stock market, obviously, but I have a business that I run day to day. So for me, building cash flow is my always been my sort of number one goal. Ever since I started my business, is how can I get more cash flow and how can I increase or improve my monthly cash flow. So that's really, I've taken that principle from my business and putting it into the stock market, which is where we have got the dividend section of the portfolio. This dividend portfolio, these ETFs anyway, are very UK and Europe sort of weighted. So I may start to look at that. Obviously, we do have the All World, which is a lot of it is the US. So I guess that that's fine. But yeah, this is the portfolio. Those are my thoughts during this sort of war market crash. Is I am just going to be loading up. I don't care how low the prices get. I know that there's going to be a recovery, especially in these ETFs that I am in. Now, of course, if you're in stocks that are low caps, that are sort of meme coin, penny stocks, just crap gambles. And then obviously during a time like this, when there is a lot of geopolitical stuff going on, and those stocks crash, then there's obviously not as much certainty or possibility of things going back up like there is something like the S&P 500. So those are my thoughts. With that being said, that is about it. Let me know down below what you're doing during this crash. Are you buying? Are you sitting on the sidelines with cash? Let me know. And with that being said, thanks for watching, and I'll see you on the next video.